All right. Good morning, everybody. Welcome to the Hurley Investments Trade Findings and Adjustments of March 3rd. Just getting my singing voice ready. Make sure everybody can hear me. Looks like it's telling me that my microphone is on, but just want to make sure, as usual. Send me a little thumbs up. Loud and clear. Thanks, Jim. We've got two Jims in here today. How lucky are we? Jim K and Jim B. All right, a nice crowd today. Good to have everyone this morning. Why don't we start a little bit with just looking back about what I talked about, I think on mid-February. It's been a couple weeks. It's gone by quick. And we were talking about bullish trades that could be done on Disney. Of course, since then, Disney had gone on a nice bullish trend, had great earnings, and then of course Russia invaded Ukraine, and it's kind of come down and tapered off. Kind of is what it is, which is why it was good to go through a bunch of different cases where you could look at and decide what might be the best bet and the most safe way to grow some money and be able to accommodate adjustments in where Disney would travel in the future. I hope that was somewhat informative. I'm going to go ahead and erase this now, and I'll just mention before I do, how important would it have been to have gone with something like a leap bull call calendar or a leap long call, as opposed to a naked short put, a bull put spread, or even a bull call that could last 60, 90 days when we had a bit of a pullback. Why on earth Disney would pull back? Because of Russia-Ukraine conflict. I'm still trying to figure that out. Your guess at this point might be as good as mine. I don't know, restrictions on travel. How many of these people are worried about going to Disneyland? Not to make light of the situation, but come on. Sometimes the market is a bit silly. But, as we always say, rising tides raise all ships, and lowering tides does the opposite, right? And I think that's what we're seeing specifically for Disney. I would think long term, I wouldn't think, it's very evident long term we're going to be just fine in Disney. And we just kind of take the punches in stride. So, along those lines, what I want to talk about today, let's go to our market screen chart. Market's kind of on an upward trend, bouncing and trying to hold up, but we're still longer term kind of in this, we're kind of in this range headed down. And it seems like a couple of these mornings, this one, this morning, we've started up and things have kind of pared back. So at this point, what I kind of want to do is tell you, um, we're real people managing real money in the stock market. This isn't some sort of investing education, although we kind of are giving you some education. We're real advisors, real money managers doing this in real life. And so we can't justify just churning out the churning out a trade every single week, regardless of what's going on in the market, and showing a paper trading account and assuming that you guys are going to be just fine placing trades, whether it's a good time or not. We actually kind of have to worry about this stuff. So today we have protection on most everything except for Bank of America. It's down a little bit today, trying to hold in there. But generally, you can see just a couple of positions that are our big ones. Baidu down a bit today, and our puts are making up a bit. Other set here. Got Boeing down slightly. Oh, that's not Boeing. That was something else. Here's our Boeing. Boeing down 6,000. Not down too much for Boeing anyway. Making up most 95% of that. Or maybe more like 90%. Disney down a bit. Have puts here making up some bit. Most of them are here, making up much more. Facebook making up a little under half today, as it's up above our strike price. You see 205 there. It's trading around 206. So it's come down from 210-ish, 208 the last couple days. And our 205 puts are making money on the way down. But since it's not in the money, down past 205, it's not going to make up every dollar, or a little closer, as you see from some of the other ones. What else do we got? You notice I skip over a bunch of stuff, and that's really just because that they're managing themselves, and we kind of just have them there grouped with everything. But generally, we're showing everything that we are paying attention to in our big positions. Under Armour, we're making up about half, as again, we're sitting at put here at 17 strike, and it's just barely starting to go back into the money at 17 from coming down from 18. Let's see, Visa, a little different today, up, and so it's kind of the opposite. All this to tell you, this is a very volatile market, and today wouldn't be a day that I would be trying to guess where the market's going to go. If anything, there is stuff coming up that I would be a little more apt to keep protection on, and have been, and really looking more at focusing on what those things are. So let me put that to you guys as a question. What do you see coming up near term that have you a little more, let me say it this way. What are some things coming up that have you a bit worried, or even certain situations that have you a bit worried where you'd be more likely to say, you know what, let's be protective and let's make sure that we're protecting the value of our stock ownership instead of trying to do some one-off trades to try and make a little money. What are some things that we need to focus on coming up? Thanks, Jim. And that is perfect. Interest rates. Interest rates going higher with the Fed looking like they're going to continue to stay the course with what they were saying. So when is that? 2 weeks from yesterday. Mid-March. The Fed's going to come out, and it looks like they might have an interest rate hike coming up. When Powell was questioned yesterday by Congress, basically said that interest rates are going to have to come up no matter what's going on with the economy. So, got to think that's nothing's changed there, but you can count on the market still reacting to an interest rate hike if it comes mid-March. Thanks, Kevin. Kevin telling me he delivered my check. What else do we got? And thanks, Jim. That was the big one. Obviously, usually we're not too worried about the Fed meetings, but we know that this one's going to be a big one. And so really we're looking out those 2 weeks and trying to make sure we have most things protected. I'm going to throw this one out. Russia-Ukraine war is still going on, and who knows how long that will go, but we're really, it's an ongoing issue that we're still trying to figure out how, and the market especially is still trying to figure out how it affects the economy, world economy. Gas prices going to back up to all-time highs. You've seen bank stocks kind of hit with some worry about how shutting Russia out of some of the banking that they need to do worldwide, how that might affect things. Bank of America, like I mentioned, still kind of holding there, but that's one we might need to get protected. But on the other hand, we're also cognizant of the fact that Bank of America and our banks should be doing better with rising interest rates. World economies, gas, oil, supply chain issues. Reason I think why market has bounced and kind of held on this last 2 weeks is because Russia is not the biggest worry in the biggest economy. I think they're 11th. They have a similar GDP than the state of Florida, which goes right into Jim's comment, what China learns from our position on Ukraine situation. China certainly would be a bigger worry as it's a huge economy. And they might be sitting back and thinking what they might be able to get away with for invading Taiwan. But this is more of a speculation and not necessarily a planned event coming up, but certainly a risk of that could be on the horizon. Thanks, Jim. That was from Jim K. Runaway inflation, food and gas storages. From Jim B. Yes. So with sanctions on Russia, and if countries aren't going to buy, aren't going to take the natural gas and oil from Russia, that shortens the supply, which is why gas prices have gone up. Oil does affect inflation. Higher prices on gas affects travel, affects shipping prices, and on down the line it goes, right? Which is probably why you hear Jay Powell coming out yesterday and saying, yeah, we're pretty much just going to raise rates no matter what's going on with the economy. China, Taiwan, let's see what else. I'll say gas / oil affecting prices, increasing inflation. They're kind of more general worries as opposed to specific events. What else do we have? Jim says supply chain issues are still a problem, which is true. Although it's getting a little better. I can't imagine this war is going to help. But again, Russia is not the biggest economy where we really have to worry too much. They pretty much just export, their main export is natural gas. But it's all kind of wrapped up into the whole situation, and it's all of the issues are causing volatility right now. I'll say we have tax selling coming up as people forget that they were paid ahead of time for the child tax credits that they're going to have to pay back. And let's be honest, people didn't save that child tax credit, they spent it. Didn't save it, which means they're drawing from their investment accounts, they're drawing from their savings accounts, etc., etc. Could create some tax selling for tax season coming up. Jim says, do you think we are heading for a recession? It depends. We have, in spite of, COVID and all the problems with employment, we've got a lot of people employed. We've got a lot of people making a lot of money. It's still possible that inflation can pare back and come back down. And I still think we have the world economy still opening, and supply chain issues still have the opportunity to get better. So those are some things that kind of offset any negative stuff. But on that hand, and on the other hand, inflation could be much worse than we fear. And I don't know and have a lot of confidence in the Fed thinking that raising interest rates helps inflation. We have this entire organization built around helping employment, stable markets, and pare down inflation. And yet I still can't get anyone to explain to me why raising the interest rates is supposed to affect inflation. If it were up to me, we would get rid of the Fed. Completely worthless. But I'm not in charge. So that's kind of my vague answer, Jim. Sorry, I don't have a better one. But I do feel like for some of our big positions and stocks, as Kevin talked about, as has talked about several times, a lot of ours last year were the dogs of the Dow, and typically the year after, the dogs of the Dow turn into the I don't know what the opposite of dogs of the Dow is, but long story short, our dogs of the Dow are now going to should be taking off. Bank of America took off last year. Apple was up last year, but still doing better, still making record amounts of money, and really should go higher. Baidu, for heaven's sake, has posted great earnings all through, just going sideways and negative, and no reason it can't take off. Disney, we already talked about, but for heaven's sake, after doing so incredibly well, they're another dog of the Dow that, for heaven's sakes, should be doing well with more opening of the economy. I think I mentioned a couple weeks back, we took the family out to Disneyland, and it was as busy as I ever seen it. Parks are coming back. They're still doing good on their streaming, and Disney has still not gotten any love for it. Should be back up to 200. Boeing's hit this 190 and gone up and several times, but it doesn't seem to last long. Hits up at this 200-day moving average and comes right back down. But things still continue to look good for Boeing. It doesn't look nice that airspace is restricted for Russia, but for heaven's sake, Boeing still has all these planes they're ready to deliver, and Russia's really not the place that we're worried about. It's more domestically where we have all the big airlines that need to cycle out their old planes that are less fuel efficient and get in the new ones, the 737 Maxes and the of course the Dreamliner 787s, where they're going to be able to spend less money on fuel as fuel prices go up. It's going to be a necessity. Take out the old ones, get in the new ones, more efficient new ones. I would think Boeing's set to look really great. So a lot of good reasons for some of our stocks that hadn't performed last year to go up. And man, 3 or 4 of these go up and we could be looking at an amazing year, even if the stock market really does not look amazing. And even if the economy slows down a bit. So long story short, we not going to have a trade, and we have a lot of stuff coming up, and we're in a situation where volatility is very unpredictable or is causing some unpredictability. You tell me where this is going to go. Anyone's guess. You saw the channel I drew. You know, the market could still continue to shrug off the war in Ukraine, or there could be more problems from it. I will say it's been rather odd and awkward hearing everybody say, there's military convoy on its way to encircle Kyiv. There's a lot of bombing in Kyiv. Weird to hear the president say your name. Kyiv this and Kyiv that. Guys, is there any other thoughts or questions? Thanks, Jim, for your question. Jim K says food prices and supplies are going to be a big factor that is not widely recognized. For sure, and especially if it continues the way it's going. Maud says, thanks for supporting the cause, Kyiv. Of course. Thanks, Maud. Question from Destin. Do you have a collar on Boeing? Here's our shares. Here's our puts. Someone has a call, but this is, I believe this is pit against this one. Oh, it looks like someone's got a bull call, and that would be another client with his own position. But no, we don't have Boeing collared right now. Could be a good idea. Erase these drawings. Go back to Boeing. Get my pointer. Going back to Boeing, if it gets back up to this 200-day would be the time you could put on collar up at 235, 240 on your short call, knowing that it might continue to go back down after it hits the 200-day again, as it's done. But it also kind of depends on why it's gone back up to the 200-day level. If it's after earnings in the next quarter where they say they're delivering planes like hotcakes, then that might be the reason for the market to pile money into Boeing where it continues up above the 200-day. Oh, I see what you're saying, Maud. Yes. Supporting the cause by going to Disney. I did my part. If I had the money, Maud, to buy a few Boeing 737 Maxes, I'd do it. Give them a little bit of help. Unfortunately, I don't have several $1 billion lying around where I could spend money on a couple of 737s. Not that they're worth $1 billion, but only a billionaire is going to do that, right? I saw that they um, some guy on Twitter had tracked all of the Russian oligarchs' planes, private jets, and one of them was a guy that had a full size. I don't know if it was a Boeing jet, but it was, a full size airliner. Might have been an Airbus. I don't know. So whenever I become a Russian oligarch, I will buy Boeing and not Airbus. You have my word. Any other questions, thoughts, guys? No problem, Jim. Thanks for coming, everybody. Nice group out today. We'll see you guys Monday night, of course. And there's no other questions. Thanks for joining me this morning. Let's keep our eyes focused on what's coming up and be somewhat practical and realizing that, we just don't know where things are going to go right now with so much uncertainty and things happening in our world that we just don't know how they'll affect the rest of the world. So keep your eyes especially on that interest rate hike coming from the Fed mid-March. And that's really our focus. And of course, tax season. Two big things coming up. And that's all I had for you. Thanks for coming. We'll see you guys Monday. Have a good weekend.